Very good evening. Welcome to Bizworld. The first story of the day. Malaysia has cut its export duty on crude palm oil to 0% for June, from 4.5% in May. The reference price, calculated by the world's second largest producer and exporter of palm oil, stood at 2,122 ringgit and 77 cents per tonne. Global demand for the edible oil has been gravely affected as efforts to curb the spread of the coronavirus outbreak shuttered restaurants and halted most travels around the world. However, with the end of the Movement Control Order (MCO) in sight, many businesses are now making plans to resume operations after practically being inoperational for the past 2 months. Malaysia benchmark palm oil prices have dived about 35% since the start of the year to trade at 2,130 ringgit per tonne on Thursday, hovering near 10-month lows. Last year, Malaysia exported a total of 27.86 million tonnes of palm oil products. The ringgit is expected to strengthen to the 4.3 level in the fourth quarter of this year, as the potential of US dollar strengthening will be limited with more weakening pressure. AmBank research said this is in part due to the risk of a more severe and protracted global recession that has diminished. It said the global lockdowns and MCO measures are slowly being relaxed and earnings disappointments will start to ease. The research house said the focus will be on forward-looking figures, which would suggest a stronger and more durable recovery in 2021. As such, there are strong possibilities for investors to shy away from safe haven currencies like the dollar and yen and to be open for alternatives. Malayan banking Berhad has been named as one of the world's best banks by the Global Finance magazine. Maybank joins other Asia-Pacific, APAC counterparts such as Australia's Commonwealth Bank, China's ICBC, Indonesia's Bank Mandiri, Singapore's DBS and South Korea's Hana Bank. Global Finance said Maybank was rated A by MSCI ESG Research for the sixth successive year. The country's biggest lender also had presence throughout ASEAN, China, the United States and the United Kingdom. Global Finance stressed that amid challenging external environment, APAC banks had posted a steady performance. This was rooted in ample capital buffers, a low cost of credit and funding largely by deposits, which bodes well for the post-COVID-19 era. After the COVID-19 crisis, some market observers argued that most highly rated banks in Asia will return to profitability and continue to merit high ratings. Glove maker Hartalega Holdings Berhad is set to benefit from robust demand for rubber gloves, which has led to longer delivery lead times. Kenanga research said demand has risen to an average of between 80 and 100 days compared to 40 to 50 days normally. Longer delivery lead times indicate demand will outstrip supply, at least over the medium term. The Malaysian Rubber Glove Manufacturers Association, MARGMA, has forecasted a 20% demand growth to 230 billion pieces in 2020. According to Kenanga research, signs of demand outstripping supply could potentially lead to higher average selling prices, coupled with incremental cost and higher OPEX. The firm also said that industry had raised prices by 3 to 5% in anticipation of higher demand. That's all the time we have for Bizworld. I'm Arif Subhan. Thank you for investing your time with us and keep tuning in to TV3.